Hi there, welcome to Kneppy Invests. Exciting video today because I'll be talking about pearls and a pearl company, possibly the only pearl producing and selling company on the ASX, and that is Atlas Pearls. Now, I might be a little bit biased because I actually am a shareholder of this company, and I bought a very small parcel of shares on the back of their financial year 23 results and the valuation of this company. So I'm going to give you some of their financial year 23 numbers and just realistically think what the market cap might be of this company on the back of these numbers. So profit, $9 million. Free cash flow, $6 million. Cash of $7.8 million with no debt. And all these numbers increase significantly from financial year 22. Now, so if you're just doing a very rushed analysis of this company and evaluation, and you thought, well, I'm going to be a little bit conservative, and instead of valuating this company at 10 times profit, I'm only going to do it at 5 times profit. So be very conservative. That means the market cap of this company should be about $45 million. But however, they do have $7.8 million of cash, no debt. So possibly and probably the market cap should be a little bit more than the $45 million. So maybe $50 to $55 million market. Well, you'd be completely wrong. In fact, the market cap of Atlas Pearls is only $25 million. Now, that's at a share price less than 6 cents. So I have no idea what the share price is going to do. Share price is trying to break out. And even though the company has given their shareholders a special dividend of 0.35 cents, share price has held up pretty strong. So Atlas Pearls is a producer of South Seas pearls. Now, I am no expert in pearls. In fact, I know nothing about pearls. I'm not sure if South Sea pearls are any different or better quality than other pearls throughout the world. But this company has 7 farming locations throughout the South Seas area. I think most of their farming locations are in Indonesia. And Atlas Pearls harvested 540,000 pearls in financial year 23. Now, I'm going to give you a couple of quotes from the chairman's address found in their annual report. So the first quote states, results would have been significantly better. So usually you'd see the chairman or a director or the CEO say results would have been significantly better after a bad year, a pretty down year. But this was an absolutely fantastic year from Atlas Pearls. Yet the chairman is saying the results would have been significantly better if the annual harvest of pearls had aligned more closely with the historical trend of the internal quality index measure. Now, a lot of that went completely over my head, but the most important thing there is it could have been better for this company. The second quote I'm going to point out from the chairman's address, understandably, our shareholders have raised questions around capital management prospects given our improved performance, and more than likely, those raised questions are in regards to dividends. Now, the company did give a special dividend of 0.35 cents to the shareholders, and he also talked about dividends, and more than likely they won't have a consistent dividend strategy moving forward, and they're just going to rely on special dividends. The reasons behind that, he did give inherent uncertainties of aquaculture, the need to fund future operating costs between sales event, and the cyclical swings typical in the luxury goods market. Now, this company did face some headwinds, and the biggest headwind this company actually did face during financial year 23 was a lower quality pearl. So again, that's pointing to the fact that the results could have been better if pearls were of a higher quality. But one of the tailwinds this company had experienced during financial year 23 was increase in the price of pearls during the year, which does make sense because pearls are associated with luxury goods market. And it was a really good year for luxury goods because when you think about it, when interest rates are rising, wealth is transferred from, say, the middle class to the rich. Now, that might be a bit of a surprise, and that is one of the reasons why luxury goods companies are doing really well. Just think Satire, just think Atlas Pearls and Pearls, because the richer are getting richer, while the middle class with the higher mortgages are suffering a little bit right now. So if you disagree with me about that, just leave your comments in the comment section. But that's what happens when interest rates rise. There is a transference of wealth from the middle class to the rich. Now on to Atlas Pearls financial year 23 results. But before we do that, completely forgot that the next 5 videos I'm going to be doing in this particular series, this is a viewer suggested or motivated financial year 23 series. So all these companies have been suggested by viewers of this channel. And the next 5 companies I'll be doing a video on include MMA Offshore, which will be the next video, Rectifier, Whitehaven Coal, Silk Logistics, and Pure Profile. So look out for those videos within the next few weeks. And now on to the financial year 23 results for Atlas Pearl. And I've already mentioned some of these numbers, not revenue, but revenue was up 26% to 27.2 million. Profit up almost 100%, so almost doubled to 9.1 million. So even if you look at the financial year 22 numbers, this company still looks cheap. So profit above $4 million, yet a market cap 25 million. So even if profit was steady from last year to this year, this company still looks pretty good. Gross margin 62%. Operating cash flow, 8.3 million, free cash flow, 6.1 million. And what they did with that cash flow is they paid off their debt. So they had something like more than $1 million in debt. They paid that off, and that's exactly what management should do. So at this point in time, this company has net cash of $7.8 million. Equity up to $34.1 million. That's a nice increase from 1 year ago. In fact, about $10 million increase. And that's exactly what you want to see. You want to see equity increasing. And right now, at a market cap of $25 million, this company is trading below book value. Return on equity, 32%. Return on invested capital, 32.1%. I would expect those numbers to fluctuate quite violently from year to year. I don't or wouldn't expect this company to have consistent results from 1 year to the next. So even though this company had a really good financial year 23, I maybe wouldn't expect that to continue into financial year 24. And I would expect return on equity and return on invested capital to fluctuate as well. Shares on issue, 427.9 million. So not too high, not too low, just about right for this type of company. And at a share price at less than 6 cents as I'm speaking. The markup of this company is actually 24 million. So roughly between 24 and 25 million. And the enterprise value at $16.1 million. Now to the valuation metrics. And the whole reason I took a position, a very small position in this company, is because these valuation metrics look absolutely absurdly low. P ratio 2.6. In fact, the EV to free cash flow is also 2.6. Those are way lower than what you usually find for any company, not only in the ASX, but throughout the world. Price to book ratio 0.7. So again, this company is trading below book value, and this company has quite a few good assets on its books. So $7.9 million in cash, $3.3 million in inventories, more than likely pearls, that sort of thing. Also about 20 million, 18 or 19, $20 million in biological assets, which more than likely is oysters. So they do have a fair bit of good quality assets on their books. And right now, this company is trading below the value of their net assets or their book value. So all these numbers, these valuation metric numbers, look absurdly low. And that is the main reason I took a position in this company, because when I compare the risk and the rewards, it's an asymmetric right now. It's just an asymmetric bet that more than likely, because of the valuation of this company right now, you're going to win out in the end. Now, that's not an absolute, because there are risks. But just because of these valuation metrics, where they stand right now, I thought this was a pretty good probabilistic play for the future. Also did a reverse DCF based off the earnings per share. And to justify the current valuation, the earnings per share would have to decrease at 18% per year. Now, that's possible, I suppose, but more than likely, I think the earnings per share over the next 5 to 10 years might grow. It might go back a little bit, but decrease 18% per year. I think that's more than likely unlikely. So I'm just playing probability right here with Atlas Pearl. And that's why I've taken a small position in this company. In fact, I will add to my position if I see this financial performance of the company continuing in the future. Now, I would not call Atlas Pearl a high-quality company just yet. In fact, more than likely, I'll never call this company high quality, because there are a lot of risks involved with the financial performance. And one of the risks is they have no control over what price they can sell their pearl. So you should consider Atlas Pearl as a mining, or just like a mining company. But anyway, I did have a look at the revenue, gross margin, income, and free cash flow of this company over the past 10 years. Now, if you discard the last 2 years, it was fairly bleak. Revenue wasn't really doing anything, going sideways. Some years this company was profitable, some years it was loss making, and same thing can be said for the free cash flow. Gross margins were all over the place. It seems like 2020 was a worse year for this company, but ever since 2020, revenue has been climbing quite consistently. In fact, revenue has more than doubled, and that makes sense because 2020 probably was a fairly weak year because of COVID-19, but revenue has more than doubled. Profit has increased from being negative to $9 million. Company has been free cash flow and profitable the last 3 years, and also gross margins have been increasing as well. In fact, gross margins in financial year 23 was the highest this company has seen in the past 10 years. Now, the question is, can they continue this momentum moving forward? The market is wary about that. In fact, the market is saying absolutely no, 100% no, because if they can continue this sort of financial performance in financial year 24, financial year 25, in fact, only just one of those years, this company is absolutely dirt cheap at these prices. And then again, that is one of the reasons I took a position in Atlas Pearls. Now to the charts for Atlas Pearl. We're going to look at two charts here. First one is a daily chart, and in the next slide, we'll look at the weekly chart, or maybe the monthly chart. I forget. But the daily chart looks really good. Share price has moved, or is in an uptrend, moved into an uptrend around about May or the middle of this year, leading up to the release of the financial year results. And this is understandable because I think the market was aware, or those who knew this company existed, that more than likely the results were going to be pretty good. But even so, the share price did pop up on the release of the results, and the share price has kept on increasing ever since, even though the share price did go ex-dividend. And right now, at share price of 5.9 cents, I am recording this video at 9:45 a.m. on 14th of September. The share price is at a multi-year high. It went above the old highs we saw back in April of 2022. So when was the last time the share price was this high for Atlas Pearls? To get that answer, let's have a look at the weekly chart. So as we look at the weekly chart, this goes back to 2013. So we're looking at a 10-year period here. And from 2013 all the way through to, say, 2021, this was an ugly looking chart. There was a period of time in 2014 when there was a bit of hype in this company. Share price took off and then fell fairly quickly. The Matador or Matterhorn pattern, I call that. You have seen that sort of pattern in a lot of tech companies, non-profitable tech companies in the past 2 years. But when you look at the share price right now, the last time the share price was at 5.9 cents. I'm recording this video at 9:45 a.m. on the 14th of September, and the share price on the 13th finished at 5.9 cents. The last time the share price was this high was way back in 2015. So we are at an 8-year high for Atlas Pearl's share price. And the daily chart looked bullish. The weekly chart is looking bullish as well. So everything moving in the right direction for Atlas Pearls. Financial performance looks good. The chart looks really good as well. And if this company can prove that the financial year 23 performance was just not a one-off, if they can continue this momentum, I think more and more people, more and more investors will become aware of this company. And that's when you will see the share price continuing to rise. And I'd like to see increasing volume. So that's one thing I want to see is increasing volume. We started to see increasing volume during 2021, but we haven't really seen it pick up in the last few months, particularly on the back of the financial year 23 results. So we want to see fund managers become interested in this company. So maybe the fund managers need to see a few more years of financial performance before they get interested. But right now, I think what's driving the share price higher is just the valuation of this company. And investors like me just look at the valuation and go, well, I'm going to take a nibble, just because it looks absurdly low, the valuation of this company, based off their financial year 23 numbers. And what harm? What harm is it to buy this company at a P/E ratio of 2.6? And that is all I have for Atlas Pearl's financial year 23 results. If you have any questions about this company, if you know more about this company, maybe I missed something and you want to add to what I've discussed in this video, leave your thoughts, your opinion in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice and you want to seek out someone who is qualified, then speak to that qualified person who can speak to your own financial needs. That's it for this video. Have a good day. Bye.